Well, hello. Welcome, everyone. It's midweek update time. It's the 1st of June. Moving into. Is it the first month of summer? Anyways, my kids were out of school last week, so it feels like summer's already been going for a month, right? If you guys have small kids, you understand what I'm talking about. Let's get into this updates for the first day of June as these markets are giving us a lot of stuff to think about. They're actually giving us some things to trade, to tell you the truth. I'm liking this. The discussion here at Maverick with Corey, Darren, and Rob, and myself can be pretty different, to tell you the truth. So, pessimistic, optimistic, and somewhere in between. Just make sure whatever you get from this course, you take it with a grain of salt and take responsibility for the outcome. So, moving into the market recap, guys, let's just jump right into it here. It was definitely a strong bottoming move. I'd put that in quotes, whatever you want to call it, a strong bounce or a bottom going into the holiday weekend. And the markets are so far struggling to keep momentum. Today looked pretty promising. I imagine we needed a hesitation day yesterday because markets were closed Monday. But today we're kind of rolling over. And I'll tell you one thing that I've been following along with. We are definitely seeing reaction to news. Now, folks, I don't know if you guys tapered off into the holiday weekend. I was physically there, not mentally there, but I did catch the PCE number showed some pretty hot inflation. 6.3% is way too hot. But it did show some promising year over year that it was actually plateauing or a little bit less than expected, and the markets took it and ran. So, yes, very reactionary in the markets, and yes, just searching for a reason to maybe go bottom fishing or short cover. But we did get one of those bearish bounces that Corey's talked about in the past that we've seen, these big, huge, large percentages moves off of the bottom. And it might not be done yet. It looks like we're a little bit caught up, and I'm just going to go ahead and tell you what I saw. We had an employment number, job openings, 11.4 million that actually came down from a revised 11.9. It was actually at 11.5 previous, but they revised it up to 11.9. And so we're seeing contraction in job market. Now, people will say, well, no, Joe, I go down the street and there's help wanted signs all over the place. Well, for sure, like for food service, Burger King, restaurants, some of that nature, some of that. But when it comes to auto, auto industries or larger corporations, bigger, manufacturing, so on and so forth, if we start to see those hurt by inflation and we start to see layoffs, that could create a massive snowball that we probably won't feel it till the end of the summer. But to see the markets react to that, now once again, the day's not over. You guys know how this works, but that number came out and the markets immediately contracted and started to slip. And it's not a bad number. It does show a little contraction. It does show that maybe businesses are thinking about slowing hiring down because they're worried about inflation impacts on their bottom line, blah blah blah. But the consumer is still holding pretty strong. So we'll see how how that plays out. But right now we got a super sensitive market. So still cautious with little pain felt so far, and I'm going to just continue to say that. I know traders are looking for the bottom, and this has got to be the bottom, and that's it, and things are looking good. But until desperation hits, I don't think capitulation happens. You've heard me say this for weeks, folks. However, this bottom could hold for quite a while. We'll get to the chart here in a minute. So the economic data I'm going to call it fragile, and the reason being is because there are demand remains that are super strong in some areas. One thing that the interest I thought was pretty impactful, Rob made note of this on Sunday, is new home sales, existing home sales, they're all just going down. They're falling apart. But you know what's not? Home prices. We got a home price number that actually increased from previous, but it is year-over-year smooth year-over-year. But what's interesting about that, home prices aren't coming down even though sales are falling off a cliff. Think about that. That shows you that inflation is there. That shows you this impact, so on and so forth. Then the bearish signs concerning inflation remain. What we're basically using that as an example, I should say. So pretty interesting, right? It's going to be it's a very interesting market. It's going to be a pretty cool summer. That being said, we do have some great traits. Here's some from last week's class: UNG, USO, COP, energy, right? Oil, all that stuff. Then in the neutral side, we have a bond, the BWA, or TLT, excuse me, and then we have BWA. On the bearish side, there's some stuff that's rolling over. John Deere is one that I think is just going to be really hurt based on the increase in cost of farming, so on and so forth, and the inflation costs of, oh geez, I guess I should don't want to oversimplify it, buying a tractor, right? So if you've got a farmer that can't sell his crop for any profit margin and the tractor just went up 20% in cost, it creates this horrible thing. And then PEP was one I thought was really cool. Both those I pulled from Corey, but let's take a look at a couple of these. So guys, here is the UNG, and it did the exact opposite of what the markets did over the weekend. However, what I love about this is it stayed in there. It was a beautiful bull pullback right to the rising 20-day moving average there at $28. Nice confirmation today as it's trading above it. I would be pretty confident or comfortable, folks. Even if you're a little bit more bearish in these markets, this is still a flight to safety. I know that Corey's actually unloaded quite a bit of his energy stocks for some pretty good profits, but he's expecting a little bit more than just an oversold bounce, which is great. That's why I love when people trade their opinions. If you use your plan, then your opinion's going to be fine. So keep that in mind. I'm of the state that's pretty much between Corey's optimism and Darren's pessimism. I know you guys have been following us for a while, and I love when Darren comes out and says, "Do you think inflation's peaked?" I don't think it has, But I like the way that he reads those tea leaves. So I'm going to be somewhere in between, guys. Keep that in mind. But I do like the pattern. Throw everything else aside. It is a good pattern. It's in the correct sector. It is kind of a flight to safety. Energy is going to have its problems if we do. I don't hope not the R word or anything, but if we do see a slowdown in growth and expansion, which we are definitely in contraction already. And guys, I want to make mention of that. We are not expanding anymore as an economy. We're not contracting, but we're just not expanding. So that's your first sign of a slowdown, which is a good thing in the long term. But if it gets too aggressive, if we contract too much, then it can be something a little bit worse. However, pretty safe bet, pretty safe sector. Another one, USO. This one gapped up yesterday and came back down. This was that beautiful ascending triangle pattern we've been talking about for a couple of weeks. I liked it last week. I like it this week. I still think it's great. It's in the right sector. It's a pretty easy move to throw a couple of bucks out in something here and feel pretty confident about. And that's kind of the topic that I've had with coaching with you guys over the last couple of weeks. It's a time frame thing. And the coolest answer is just throw it out there for when it's working. You don't need to commit to these things for 3 months. Just throw it out for a week or two. And this is one of those. Diagonal spread, short-term vertical spread. I would say straight calls would be fine, just depending on how close you maintenance these or manage them based on your system. You're probably better off hedging it out or hedging some of that volatility out with a diagonal spread or a vertical spread even. But do it short term. 5 days, maybe 2 weeks, nothing more than that. But it's been working out pretty good. So, oops, I hit my roller. Let's jump to our last here. This is ConocoPhillips. Another ascending triangle breakout confirmed itself pretty strong last week and has done not much since kind of this push-pull. Look at the volume yesterday. Yeah, there is some definite worries out there. There's some definite push-pull when it comes to traders trying to make decisions on if I'm going to bottom fish, I got to hedge myself out in other sectors, so on and so forth, or it's just an overall short cover rally. You're seeing some profit taking. Love the fact that Corey was saying that he was taking some profits out of energy. So is probably a bunch of other people. Might as well scalp it out if you think the markets are going to plateau here, or you think that the markets are actually going to establish a higher base and move higher, and some of those things getting smashed that have been crushed overall are coming off the bottom. Now, as I go to this next chart here, guys, I'm going to go to TLT. This is kind of a sideways chart. Keep in mind, there's a lot of stocks that aren't participating in this bounce. Keep an eye on those stocks. ARK isn't. I'm not seeing too much at, Amazon and Tesla will follow through, of course, but there's like Peloton, Zoom. Some of these companies aren't participating in this bounce. There's something to be said about that. I haven't seen Coin today. Actually, Coin was one of those sideways ones, but in light of what's been going on in the crypto side of things, wow, that's something you just want. That's a hot mess that you should just stay away from. So let's let some of this stuff play out because the tea leaves don't lie. And once we get this huge bounce, and if it becomes a solid bottom, we'll see what survived and what didn't. So I would say putting anything into anything past 2 or 3 weeks, meaning longer term, just doesn't make sense. So okay, let me backtrack here. Here's the TLT. Definitely going to be interest rate sensitive. We are starting into June. How many hikes? 2 hikes do we have planned for this month at least? So on track for that. I don't see any changes. We could see the reaction of the markets if the Fed comes out and sees another PCE number that's slowing down, or maybe it spikes because this is a waxing and waning thing. One week it'll say something, 2 weeks later it says something else. So it's this slow moving boat that takes days to turn. So keep that in mind. But what I like about this is it isn't between that 120, 115 mark. We've talked about this sideways wise for a while, and it's been super sweet. So if we can stay here, I mean, you've got a pretty good shot at a butterfly between the 115, 120, 117 and a half, or condor, or credit spreads. Some are bouncing between that. You guys could zoom this in further, maybe throw some Fibos on it, and Bollinger Bands. So pretty cool sideways wise. This BWA, we talked about this sideways. I actually added this could be a breakout if it does push and move higher. Really looking really good for it as the markets bounce, but today not so much. If this can roll over off that 40 and come back down to 38, we've got another test of those moving averages. This is going to continue to be a pretty good sideways trade. So I like it moving forward. And that's the second week, third week we've looked at this, and it's been a pretty good trade. Great work. Wayfair. This had its bounce, but it was a technical, beautiful bear rally. 3 to 5 days retracing to a falling moving average, setting a reversal signal, which it did yesterday on decreasing volume. Haven't quite got the confirmation today because it's got a trade below that previous day's low, but it doesn't get much more picture perfect than that. So throw a couple bucks at it. Great, totally fine with that. Vertical spread, diagonal it if you want to play something a little longer term. Nice trade, folks. Been on our watch list here with midweek for a while. This is PepsiCo. I pulled this one from Corey because I did agree with his analysis of it. I like the fact that it came up. It did pop up above the averages, but you've got the crossover of the 20 and the 50, and then just absolutely failed yesterday. Nice volume. Follow through today. I don't know if it's going to close where it's at. You could see a little bit of retracement, kind of a relief, especially with the size of that volume. But direction-wise, I imagine this thing just bleeds towards that 160 over the next week or so. However, if you guys think that we're going to stabilize here and have another move to the upside, I'll show you the overall market charts because we could. Then you might want to hold off on this and play something sideways, maybe something below the 170, not as aggressively targeted the downside like I would shoot for 160 in the next week and a half, or probably week. And then Deere, we already know the troubles this is going to have, but it was a classic closed gap move. So gap down a couple weeks ago, rallied right back up to its resistance, hit that 360 mark, at the same time touched that moving average. Beautiful doji yesterday. And look at the bearish engulfing candle that it's putting in today. It could change, but that is a pretty big chunk of movement when it comes to the rally that it had off of the low of what is that 317. So I like it. I like it bearish. I think it bleeds over. I don't know if I'm going to target it aggressively down to 340, 320, but put yourself in a situation to where if it does get there that fast, you can just pull money out of it. Sweet. All right, guys, let's get to the market analysis and talk about some of these charts. Okay. Oh, I'm sorry, folks. I'm reading the comments. I like to read the comments as I'm going between slides. So let's take a look at the market performance. Super strong. Now, what's really cool about this, I love the Wednesday to Wednesday. And I've had comments saying, hey, thank you for verifying, Joe, that you're actually taking from Wednesday to Wednesday as the week instead of Friday to Wednesday, so on and so forth. But the diamonds and spiders and Qs are all holding on to significant gains, even with yesterday and today's action. I mean, obviously, today's action is going to start to dig into some of those gains. It's not over yet. But holding on to 2.5% gain, 2.75% on the SPY, and the NASDAQ just shy of 4%. It's a good, solid bounce, and it's still up there. It's still technically at these levels. And when I was looking to do the research, when I was researching the class, it was a very different candlestick than it is when I actually cut these and pasted them. We'll see it in a minute. The Russell's up, still holding on to just over 2%, 2.33. USO super strong, and gold kind of bored, right? I think traders are just pulling out of it, saying that I'm not going to play the gold thing. Let's go ahead and get into some of those growth stocks that are coming off the bottom, or flight to energy, safety. It's going to be interesting to see what gold does in light of what Bitcoin's doing. What I should say, what all cryptos are doing. So we'll keep an eye on that. Here's the chart. Looked massively different a little while ago as I was looking at it at this point here, folks, thinking, okay, a little bit of a hesitation. We talked about the 420 mark. Darren and Rob talked about this retracement to the 50, and I still believe that's in play. One thing that I really love to do is take a look at the most recent and go from there. Now we are in between, and what I mean by that, folks, is the most recent chart patterns. Okay, here's a bounce, here's a bounce. You know, these are our recent ones. I don't even want to call that one. The situation that's different between these previous bounces are the separation of the moving averages. Now, if you guys want to go all the way back to our Market Masters courses, as the moving averages separate further and further, and it doesn't matter which ones you have on, we have the 20 and the 50 here, pretty standard across everything. As they separate, it shows an increase in direction, or a volatile increase, so momentum, I should say, in direction. So if you've got momentum indicators out there, like a MACD, things like that, then yeah, it might be showing, or stochastics even, it might be showing that these are actually kind of separating. So you can see how separated we are. Let me go ahead and get some fresh paint. In this situation, how far the 20 and the 50 are than they were in this situation before that first bounce. And boy, they barely made it, because this dropped so fast and retraced so quickly. So this has got a lot more room to come up, and what I like to see it as, the bulls have a more uphill move to make versus what it had in this scenario and in this scenario. However, I'm expecting more of this scenario before we roll back over. So yeah, 420 would show some pretty weak. That's a weak bounce. Moving average, still a weak bounce. If we roll over from here, geez, these markets are just a lot weaker than people give them credit for. So I'm just going to play it as that. So keep that in mind. There's no real reason to outthink anything. Let's just follow price action. Today is super ominous. Understand, these 3 days came from going into an extended weekend with a pretty strong PCE number showing that inflation might have been, or showing signs of topping. We get back from the holiday, realize that we're seeing some contraction in some of those macroeconomics when it comes to, it's just a jobs number, folks, and it's not that big of a deal. However, I can see the reaction to it. It is that big of a deal. So I'm just playing the markets in front of me. I don't really care what people think. I care what they trade. That's why we follow price action. So if this does roll over, yep, we're going to easily get that 390 mark. Where do I want to load up on my other bears is if we start to break that to the downside. So keep that in mind. All right, so I spent the majority of the time on the SPY. You can see the others are going to be very similar. Here's the diamonds. It's, it almost got to its 50-day moving average. This thing could consolidate. I would not be surprised to see if these markets kind of shake this off. The way they react to news, though, is going to be pretty interesting, and find a nice channel through here. And I think Rob and Darren made mention of maybe establishing some sort of range through the summer. I don't see a lot of people, and you guys know me, when I talk about my economics, I like to go all the way back to people I talk to, my neighbors, my friends, my family. I see everybody knowing that gas prices are hurting, right? And it's expensive to buy groceries, blah, blah, blah. We've heard it all. However, they've got money, they've saved, they've got a job, and they're not going to cancel their trip. Folks, I've got a trip coming up here at the end of the month, and I've been waiting for this trip for 2 years, right? I had to postpone it 2020. Had to postpone it again 2021. So I figure if everybody's in the same situation, it's going to happen. So I think the spending is pretty comfortable through the summer. People take their vacations. Higher gas prices, yeah, it sucks, but we'll eat it. So we could see an established range. Or it happens a little sooner than later, and they break down. All right, there's my soapbox. Let's go to the Qs. And you can see that this has done the best as far as its retracement off the bottom percentage-wise. But it's crazy when you see it visually, don't you? I mean, don't you think? It's really neat, because what's interesting is that's not even up to its previous resistance at 320, even though it had a pretty strong move off the bottom. It's still holding on to a 4% gain almost. from the move it had last week. But it is still in the most turmoil. All right, there it is. Short term bullish, long term, we're still in a bearish pattern, right? That's the joke around Maverick. So let's take a look at some of these numbers. Home price index. This is why I think it's pretty interesting. 20.6%, previously 20%, 20.0% increase. Now this is year over year, and it's a slight uptick. Now, yes, folks, I tell you the big ship takes longer to turn. This could be just a carryover, and we'll see this subsequently drop each time moving forward. I expect that. But it's interesting to see that the home prices haven't dropped, even though the demand has. Demand has to drop first, then you'll see the prices start to come down. That's kind of obvious, right? We'll see. That's on both sides, the Case-Shiller and the FHFA. FHFA was actually slightly lower. PMI, the Chicago Purchase Managers Index, it is a manufacturing number, actually upticked. The demand for things that have already been in the works. And I talk about the guy that ordered his Rivian car. It's coming, and it's going to be delivered. Back orders, I've got two friends that actually ordered that Ford Bronco, and they've been waiting for it for 8 to 10 months. So these orders are actually being fulfilled. The money's spent. It's, so if this is kind of slow, it's coming at the end. Most of the expansion I see in these numbers is on solid products, more of like cars and what do they call them? Non-disposable. So where we're seeing the initial hurt is gas, food, stuff like that, bills, things of that nature. So we're going to see which one catches first. Consumer confidence, it's at 106.4 versus a 103.9 expected. Now understand, folks, previously that was 109, so it is down from previous, but it's higher than what was expected. So the consumer's still hanging in there, and I truly believe that's what's going to keep this from falling apart. Manufacturing PMI, inline, index, slight tick up. Once again, these are manufacturing indexes for the solid stuff, not for the consumable stuff. Job openings, 11.4. Previous was 11.5. Now that number was revised to 11.9, and that's what I saw gave the markets a tiffy fit this morning. That number came in and thinking, oh no, jobs are shrinking, and they're not. 11.4 million jobs is a lot of employment opportunity. Lots. Problem is where it's at specifically. These aren't higher end jobs. These aren't the manufacturing jobs. These are service jobs. These are restaurants, stuff like that are opening. So the first sign of contraction actually sends the markets a little bit south. Kind of interesting. And construction spending ticked to the downside. It's coming from an all-time high, especially when you have the majority of construction has a lot to do with sales, or excuse me, I should say houses. We'll see if the Build Back Better kind of stimulates that going into the summer. I don't know, but construction should taper off or at least create some sort of jobs moving forward. We do have the ADP employment number. It's going to be interesting to see what that does. Jobless claims, continuing claims. You guys got them all down there. Non-farm might be pretty interesting on Friday. But if we start to see these show negative numbers, I think it shakes the tree, and anybody that's hanging on loosely will drop. That can create a pretty catastrophic rollover. All right, that's it. Let's get into a poll. Now, folks, let's see. Market direction. Cool. Oh, I did launch it. There we go. Good. So we have it. Just want to see what you're looking at. We've had some pretty interesting topics, or I should say changes in outlooks from Sunday to Tuesday to today. So it's been pretty interesting as this bounce has happened. It's pretty obvious it's a pretty strong bounce, but even today's action shows that it could be stronger. I was expecting the move that we saw last time, above both moving averages, definitely setting a higher high, maybe establishing a higher low. But even then, we did see the markets roll over and fall further. So it just depends on where you think this is going to go. Was that the bottom of all bottoms, or is this going to be a two-stager, meaning it sets a higher low, breaks out of resistance, and gets back up above the moving average and then rolls over? Just depends on what you guys are thinking. All right, so the poll is moving along. 79% voted. That's pretty decent. That's pretty decent for this class. And we don't really have too much in attendance. You guys still on vacation out there? How many people we got here? Oh, it's pretty tight today. So, and I understand. If you're not willing to play these bounces, then sitting on your hands might be a good idea until it establishes some sort of trend. All right. We're about a minute into it. Let me see if I can read a couple of comments here. Where are we on Fed selling parts of the balance sheet? Was it scheduled to start 6/1? Yeah, okay. So yeah, Scott's asking, hey, the Fed's going to take action here, and they've got it all month. Each month they got it roped out. I'm not sure the exact dates. We can actually dig around for those. And they're going to do a couple of things. The first is obvious, raise the interest rate. The other one is going to reduce buybacks. The first thing they did, if you guys remember a few months back, they really cut their buyback. They just shut it way down. They're going to reduce it by a lot, and it caused the markets to drop a little bit. I think that they keep that pace, personally, Scott. If they can continue to raise at 50 basis points without shaking trees or freaking anyone out, I don't think they need to mess with anything else. I think that's kind of what my personal opinion is, what they're trying to do. Once again, folks, the Fed is just going to get thrown under the bus all summer. You know that. Whatever they do, it's going to be wrong. However, the best thing they can do is be transparent. Make sure we know when it's going to happen and do what they say they're going to do. And I really think that's kind of what they're trying to shoot for. But I don't know about the balance sheets and what they're going to do when it comes to reducing buybacks. Very similar to the way, oh yeah. All right, Dan, I'll look at some charts. He says, hey, there's some similarities in some charts, so we'll look at those in a minute. All right, that's enough of the poll. You guys are probably really sick of looking at this thing. All right, let's share it. -1. All right. Yep. Makes total sense. And it's pretty easy to say, especially with today's candle. -1 is a very, very easy thing to say. And I believe that I might be a little bit on the bear side as well. However, I think that this candlestick flips itself. Maybe not today, but tomorrow. I'm thinking that we establish something around that 410 mark where we have a massive rally at the end of the day, or we gap down tomorrow and rally all the way back up. So +1 is a little much. I should have stayed 0, but I do see -1 action, then +1 action, then -1 action, so on and so forth. But overall, folks, I adjusted my monthly outlook to -1. And the reason being is because if this does establish support here at 410, hit the 430, it's just going to be a little bit more work before it rolls back down. Keep in mind, I'm going to say it one more time, I'm expecting this. So when this happens, I want to be ready for it. If we consolidate through here and this doesn't, we do not retest. If we can't establish a higher low, and I know Corey said this yesterday, if we can establish a base or a higher low, well then yes, I think we got a retest to 430. However, and I need to listen to the video again, I don't think Rob, Darren, or Corey believe that this was it. I don't. I do think that we're going to see something like this again moving forward. So there it is. Now you've got my 2 cents. So that's why I'm at the +1. That's for the rest of the week. I'll be -1 next week and then +1 the next week. And this might slowly creep its way down if we start to break support levels when we roll over. Okay, well, that's enough of me. Let's jump into our sector analysis, and it's exactly what you would have expected. What was the super weakest is now the super strongest. Let's get right into it because the consumer cyclical, 10.41%. That's an absolute massive bounce off of a beatdown, oversold. We saw what Walmart did. We saw what Target did. And folks, if you see these charts too, they got punished by saying they suck and they're not going to do very well. They've already had a substantial bear rally, oversold bounce, short cover, whatever you want to call it. Pull them up because they do not look good at all. So consumer definitely having the biggest bounce. Healthcare I thought was pretty interesting as it kind of slipped to the lower area. So I did find the XLY. And that's the closest I got to the discretionary. It was about 9%, 9.5% up. It's down about 1.5% now. But that's the bounce. And that is a definite oversold bounce. Nothing but. There's nothing good about it. There's no good news in it. I know that we've seen a couple of earnings come out that were pretty decent. And I didn't really see follow through. CRM, Salesforce came out, and they were pretty good. And they gapped up to resistance levels. If you guys take a look at it, they actually had their earnings yesterday. So on the punishing side, it's been a lot more aggressive. So there it is. There's that bounce. Then there's part of that 10% move to the upside. Doesn't really make me want to go out and buy it, does it? Right? So let's get into healthcare. Healthcare is all but forgotten. Folks, you know what's kind of interesting? When's the last time you've heard anybody worry too much about COVID? And we talked about this months ago when it was hot, that as soon as the world just gets sick of it, quits talking about it, it eventually won't be that big of a deal. And it is. It's spreading. It's creating, more and more infections, but they're not as aggressive. People are not getting hospitalized. It's almost a common cold at this point. I'm not sure if this is part of it, meaning that there are a lot of healthcare companies that are overvalued. So I don't know. However, it is a pretty good bear rally. So we see a pretty good move up to the upside here, touches that 50-day moving average and rolls right back down. I mean, that is a technical downward channel. Looks really good in the longer term, or at least the next few days to actually revisit that 124 mark. So trades are there. I mean, I guess that's kind of what I wanted to talk about today. I know there's some worries about long term, short term, so on and so forth. It doesn't matter if you're playing this week to week, week and a half. There's great bull trades, then they go to bear trades. So here are our these are the ones that for last week. I'll update this, guys, as we go through and look for some new trades. So let's get to our conclusion. So we did put in a solid bottom last week. That's a fact, and it's cool. It was good to see a solid bottom. We talked about a bounce. We needed a bounce, whether it's short cover rally, so on and so forth, and it did come off of less than worst news. I think I made the joke of, hey, guess what? You're not gonna lose your arm from your shoulder. You're only gonna lose your arm from your elbow. For some reason, the markets took off. There we go. So we could see another leg higher to resistance. I truly believe if we consolidate and move higher, that 50-day moving average will be a place to touch before we consolidate and roll back over. Focus on the chart levels for targets and ranges. I didn't change that from last week or this one. Error on the short term, then longer term. It is okay to play bull trades if you're short term and targeted. You see it hit your target, take it. Reward yourself. If you're a trader that does not like to play the short term bounce, wait for it to roll over. I'm that guy. I'm waiting for this to roll over. If today's candle holds, we might have another round of selling getting into the last part of the week. Now, folks, I know I'm +1, but that can change tomorrow. Still cautious and on the bear side. That is exactly what sentiment is. And I am seeing a lot of reaction to numbers. Once again, that PCE reaction in today's jobs number, very fragile. So keep that in mind. Short covering at the bottom fishing can create some big moves. You've heard Corey say this 1,000 times. The biggest bullish moves you're going to find are in bear markets. That hasn't changed. So we're starting to show contraction in the back end and consumers still strong in the front end. I'm going to leave that up. I left it up last week. I'm going to leave it up again till I start to see one give way to the other. What we want to see long term is the consumer can outlast the inflational numbers until they can stabilize. We get things going back, jobs being hired. Folks, we're talking about some worries. Once again, I've got a flight that is the end of the month, and I've actually had Delta Airlines say that there's a chance your flight might be absorbed or canceled or rescheduled. So there are larger companies preparing for inflation through the summer. I hope that doesn't happen. So let's see which one gives first. All right, that's enough. I'm off my soapbox. Let's go take a look at some trades. And as I've been talking, looks like the markets are sliding a little bit. And they look like they're trying to flatten out. So we'll see if that rolls over towards the end or we get a rally back up and something flat. All right, who's first? Let's go back to the top of the list. We've got CZR. All right. Okay. Brian's looking at, great trade. Look at this. Caesars. Let's see what the casinos do. I haven't looked at casinos in a while. Oof, that's a nice pattern. I like it. Boy, if that could bleed below that support that it's set there early May, that'd be pretty sweet. All right, we're looking at a June 10th. Guys, I want to pull up my calendar off on this. Okay, yeah, so that is week and a half. So it's week 2. 51.5, 44 bear put. Oh, I love it. Love it. Plain and simple, cut and dry. Week and a half, this thing's going to be down to 44. Excellent. Thank you. Let's see, CZR. Cool trade. Like it. You know, real quick, let's see if I can get rid of my calendar now. Let's do a raise of hands, guys. How many of you are trading straight calls and puts? Calls or puts? Raise your hand. I just want to take a little bit of a pull here. All right, I figured. Okay, only a couple of you. All right. Okay, interesting. Just wanted to check. Because there's a lot of times, and obviously I know who the guys that raise their hands were. That's good. You're in front of the markets all the time. You're able to take them off the table when they hit profits, so on and so forth. That's interesting because a lot of times my defensive move is to move to straight puts. Like for instance, Caesars here. I'd be more inclined to buy the $51 put and just watch it each day. The true advantage is to actually get rid of that volatility, lower the cost of that 51 in this case, right, Brian? And just kind of let it play itself out and don't worry about it. That eats up the day-to-day stuff, the volatility moves, so on and so forth. And even getting out of the position, sometimes I pay too much to close it. So there's a benefit to one versus the other. So I was just curious. Thanks for that. Thanks, guys. All right. Moving on. GoPro, GPRO. All right, Dan. Oh, and Dan, I skipped over your above one. Let's start with GoPro. I'll go back up because you're talking about Ford and a couple others. Yeah, I like it. I like it. Good move down the middle of May. Bounced off of that support and then just an anemic rally back up to resistance. Today's candle looks very promising. Sorry, folks. Let me zoom in on this a little bit just to make it a little easier for you. Yeah, very promising. Like it. Cool. Let me write that down. Let's see. Here's another similar chart. Facebook is another one. Seeing this pattern in multiple charts. Okay, let's take a look at it. GPRO. And it's nice when you're seeing the same pattern in multiple charts. It's also showing that some of these just, they're still oversold. This is a great one. Meta is a great example. I mean, folks, this is a stock that was bouncing around between 340 and 300. If this is indeed the market bottom and everything's great, I don't see anybody rushing out to buy Facebook. I haven't seen anybody since February rush out to buy Facebook. Sure, there's problems with it, so on and so forth. There's some worries, but you would expect, hey, this is one of those things that survived over the stay-at-home stuff. Oh, this should be back up to 340. No, it's not. So the ones that don't participate, and I was saying this early on in today's class, keep mind of those because those are really good opportunities to really beat down. I'm going to put Facebook as a bear because I do like it. Thanks, Dan. Now let's jump back up to a couple other ones he was talking about. Was it Ford? That looked pretty similar to Wayfair. It does. Another bear rally. It's one of those things that isn't it funny how I use the Ford Bronco? They're giving delivery of the cars now, but they took payment for it months ago. So when you're just dumping cars that you have to fulfill orders on, so on and so forth, it's going to keep the factories active. But once that slows down and stops, I mean, have you already reported the sales for those Broncos that were sold 8-10 months ago? Probably. So that's a beautiful bear rally hitting resistance. It could roll over. Definitely Ford on the bear side. Do we have a trade? A 13-12-11 put butterfly. Okay, love it. Love it. Taking half the range. Let me make sure I got that right. No, I'm a little lower. Sorry. 13-12-11. Sorry, guys. I'm going to have to erase all those. I'm going to call that 13, 12, 11. Targeted to this support level. Great. Nice, Dan. Very nice. And then butterfly bass. I'm just reading. Max gain $80. 14 cents to make 80 cents, right? Good. Okay. Thanks. Targeted butterflies are great, guys. You know that, right? You can put them on and take them off when they get there. It won't be for the full amount, but it can be for a pretty good chunk of change. I'm looking on putting a video out, folks, on the vertical spread and kind of the misconceptions of how vertical spreads work when it gets to a target. All right, moving along. XYL. Jared is looking at XYL. An 85.80 bear put spread. All right. Let me zoom in. Wonderful. Range bound. I'm putting this down XYL on the sideways, but I'm going to put a bearish on it as well. Oh, wow. I like that. I like that. Yeah. That's neat. Take a look at this thing bouncing between 90 and 80. It just kind of bleeds off. In fact, actually in February through April, it was between 90 and 85, and then it just kind of reset itself, retested 90, and then yeah, rolled down to 80, 85. I like that. So sideways to down, for sure. I think that's fair. All right, man. Thanks. Okay, so not a whole lot on the watch list. That's fine. We've got plenty of trades to look at. You guys could jump on our forum, let alone just revisit the end-of-day posts. The Sunday and this class, you'll have plenty of trades to look at. All right, guys, let me go ahead and type this up, and I'll cut you loose. Nothing on the bull side. Interesting. Don't you love it? Years and years ago when I first started coaching with Maverick, years ago, I always said the scan will tell you what to trade. And it's cool because I've had traders like, Joe, I've been looking, I just can't find any bulls. And I'm like, there's a reason why you can't find any bulls. You need to pay attention and trust in your scan. If there's no bulls, you probably shouldn't be trading to the bull side. Now, shorter term, I'm totally fine with that. Things bouncing off the bottom, that's totally fine. But when it comes to the motion of the ocean, that's always going to be your first indication of what you should be doing. Okay, I think I've got it all. Let's go ahead and share the slideshow from here. So, one sideways. I'm also going to put a little bit bear on that because I do like it to the downside if it slips. That's a really good target that you have on the lower part of that support. It hits support, gets out. If it doesn't, it goes further. That's what's kind of nice about the diagonal spread. You can actually sell something against it or a straight put, take half the position, let the rest milk for you. But let's see, CZR, GoPro, Facebook, and Ford. But that's what we got. Short list, that's fine. Short lists seem to be doing pretty well, folks. I've carried a lot of trades with this class forward 2, 3, even 4 weeks. So great work out there. All right, that's it. I'm going to cut you guys loose. If you need anything, you know how to get a hold of us, and we'll see you next time. Bye, everybody.